If you're new, let's talk about what we do here on Trending Thursday. Once again, we are on YouTube, and it is live here. I'm on camera. I pinch myself. I'm real. You think I'm real, Joey? Joey doesn't know. Anyway, so this is live, but again, today it's going to be recorded going into Thursday. Trending Thursday is all about looking at stocks making the news. And what we do is we look at the stories, we utilize the VectorVest software. Many of you, hopefully not many of you, but some of you may not have access yet to the VectorVest software. I will remind you, you can take a trial to the VectorVest software for $9.95 for 30 days. Think about trying it if you like the presentation as well. But what we do is we look at the stories, we go back into the software. I'm going to show you how to analyze any of the stocks that are in the news. So going forward, if you are a subscriber, you can do the same thing. You can find stocks that are making news, utilize the software to be able to help you to make a decision. So that's what we do. Now, the next thing we always start off with is we always look at what's going on in the market. So we utilize the VectorVest software to get a good feeling of how the market is. Is it bullish? Is it bearish? Is it neutral? And we're going to help you to make the right decisions at the right time. So we're going to bring up the market timing. Actually, we're going to bring up the home page. If you're not a subscriber, well, now you're getting a glimpse into what the VectorVest software looks like. And we're on the home page. And from the home page, folks, you're going to get a real solid feel of what's really going on in the market. We're going to start off with our market timing gauge today. Keep in mind, today is the 19th. We're already pre-recording this. So as of right now in the software, we're 3 green lights into the, or 3 ticks into the green. The color guard is bullish. This is our daily traffic light. We advocate buying safe undervalued stocks that are rising in price at this time. So not only do we get the daily traffic light moving throughout the day, but we have the guidance associated with it. Let's move over to our quick list of all of the indices. All of the indices as of right now are up. The Dow leading the charge, well, not leading the charge, actually. It's up 144 points, up for a change of about 0.5% today. But the big mover today is the NASDAQ, up almost 1% today. The S&P is up about 0.6, and our VectorVest composite, which is an indexed arithmetic average of all of the stocks that we track, is currently up about 0.6%. So as of Wednesday today, the 19th, all of the major indices are up. If we go over to our color guard is a 6-day snapshot on what's going on with 3 of our market timing indicators. The first one is the price of the VectorVest composite. Remember, the VectorVest composite is an indexed arithmetic average of all of the stocks that we track. Because we track all these stocks, 8,240 stocks in one ticker symbol, or the VVC, we feel that it is a better representation of the broad market move. The next indicator is RT. It's one of our core proprietary indicators, which is cast on a scale between 0 and 2. We make it really easy. If the indicator is above the value of 1, it's favorable. If it's below the value of 1, it's unfavorable. RT stands for relative timing. Relative timing looks at the short-term price trend in the market. Is the market in an uptrend or not? And the higher above 1 it is, the faster in an uptrend it is, and the more below 1 it is, the faster in a downtrend. Today, it is at 1.01. The next indicator is the BSR, or buy to sell ratio. Every stock in our database gets a buy, a sell, or a hold recommendation every day. There are specific criteria that a stock needs to meet to get one of these indications or recommendations. Currently, we have 1,515 buys and 1,341 sells. So we have more buy recommendations in the software than sells. This indicator is above the value of 1. Now, this indicator, the buy to sell ratio, is not cast on a scale between 0 and 2. But above the value of 1, we have more buys in the system than sells, and the market is showing signs of strength. We are the only ones in this industry that has an indicator that truly looks at the overall health of the market. All right, so these are the 3 things that are looked at in the color guard, and we track their trends on both a week-over-week and day-over-day basis to assign colors to their tiles. Now, this needs to be looked at as a traffic light overall to learn how to, 1, manage your positions that you're currently holding and get you ready for whether the market is more bullish or bearish. As we look at the lights, we have 18 lights in the 6 in these 6 trading days. If we look at how many green lights, 3, 4, 5, 6, 7, 8, 9. Half of the bars that are in this graphic right here are green, which means that we have more of a bullish bias in the market right now. So when you get to a green light, what do? You go. In this case, this is a good opportunity to go long in the market. If we had more yellows in here, what do when you get to a yellow light? You slow down. And you can use this color guard as a means to manage the trades that you're currently in as the market transitions from more bullish to bearish, or bearish to bullish, or bullish to neutral to bearish, or bearish to neutral to bullish. Did you get that, Joey? Mm-hmm. Joey did get that. So this is a great way of watching the market transition. But currently we have more greens than anything. The market is still showing signs of more bullishness. Now let's take this information, and now we're going to start to get into the news story of what's making the market tick the way it is right now. No matter what goes on in the market, there's 3 things that move markets globally: earnings, interest, and inflation. Now, big in the news is coronavirus. We're going to talk about that today as well. But coronavirus is more of a news story than it is a mover of markets globally. Now, can it affect the markets? Yes, it can. But the 3 things that move markets are earnings. As long as earnings are up, we're going to be in a bull market. As long as interest and inflation are down, we're going to be in a bull market. And actually, that's the Goldilocks scenario. When earnings are up, interest and inflation are down. Now, earnings is the good guys. Earnings and inflation are the bad guys. And if inflation is rising, well, then things cost more money to buy goods, and it affects us in our pocket. And as a company, it affects them in their pocket. When interest rates are rising, well, companies have to pay more on the money that they borrowed. That takes money out of their pockets as well. In this case, though, as we look at interest is still low, historically low. Inflation is where the Fed feels that it needs to be before doing anything. So right now, we're in sort of a comfort zone in that earnings are still up. They may be falling, but earnings overall is still in a positive way. So we still are in a bull market, a bona fide bull market scenario. All right. So keeping all of that in mind, let's get into our first story. First story is talking about the market. Fed Kaplan sees U.S. rates roughly right risk from the virus. So right now, when we look at the interest rates, because that's what can move a market, and when the markets are really rocking and rolling, what do we tend to do? We tend to raise interest rates to stifle an economy and keep it under control. And when the economy is not doing well, we tend to lower interest rates to help to stimulate the economy. As I look, the Dallas Federal Reserve Bank President Robert Kaplan on Tuesday repeated his view that the current setting of the U.S. interest rates is roughly appropriate through the end of the year, even as he noted risks from the flu-like epidemic that has brought parts of China to a halt, predicting consumer-led U.S. GDP growth of 2% to 2.25% in 2020, which is a drop in the U.S. We do have a drop in the U.S. employment to 3.5% from 3.6%. Guess what, folks? People are working, all right? And a rise in inflation toward the Fed's goal of 2%, Kaplan sounded fairly upbeat in an essay released Tuesday morning, laying out his assessments. Of course, this outlook is clouded by the impact of the coronavirus originated in Wuhan, China. This disease has sickened more than 70,000 people and killed over 1,800 people, nearly all in China. So even though it is a news scenario about the coronavirus, until it affects earnings, interest, or inflation, it is still news driven. So, but overall, it looks like the GDP is predicted to be at 2 to 2.25%, which is good. And people are working. These are the things that the Fed is surrounded around making right. The Fed's job is to make sure that people are working, interest is low, or you will utilize interest to either stimulate or stymie the economy, but the other side is making sure that people are working and that inflation is where it needs to be. All right, so with that being said, let's get back into the software. and we're going to go to the market timing graph. Now, our market timing graph looks at that VectorVest composite. The VectorVest composite, remember, is an indexed arithmetic average of all of the stocks, and we track over 8,200 stocks. What you're looking at here right now on this graphic is the movement of all 8,200 stocks in one ticker symbol. So when the market is moving up, we have a real good feeling of the market moving up. Now, we look at the Dow, or we look at the S&P, or we look at the NASDAQ, but they don't track as many stocks as we track in one ticker symbol, that VVC. So in our market timing graph, we can see with today's activity, the market is still hitting a new high. This is over the last year. Let's go put this on the last 5 years. How about we're hitting a new high even over the last 5 years? Let's go put this on a 10-year graph. How about we're hitting a new high over the last 10 years? So no matter what you want to say about what's going on in the world today, this is the movement of the market. This is 10 years, as you can see down here, this is 10 years, 6 days worth of data of our VectorVest composite. The market is still hitting historically new highs overall. All right, we're going to put this down to a 3-month graph to get a better feel. We have an indicator called the MTI, which is the market timing indicator. The market timing indicator looks at 3 indicators tied up into one, but it will give us a sense of where the market is looking for a bottom or a top. When this MTI gets to a level of about 1.50, let me make this line a little darker for you. When the MTI gets to a level of about 1.5, the market is looking for a top. So I let everyone know as a VectorVest subscriber, and if you're not already a subscriber, I'm going to give you a reason right now why you should consider becoming a VectorVest subscriber. Notice that we had a nice little pullback in the market here. A couple of things went on. We were at a level of a top, all right, which was, or a level of resistance, let me say, on the VectorVest composite, which was at $52.02. We touched it here. We pretty much touched it here. Okay, and as the market was getting to that level of resistance, the MTI, or that underlying trend in the market, was at that value of 1.5. What did the market do? It fell. Now, just because the market's looking for a top, we cannot prognosticate when that top will happen, but at least it's a heads-up indicator to let you know that the market is at a level of looking for a top. As a VectorVest subscriber, you should not have been blindsided by this pullback in the market, because this indicator was out there letting you know the market was looking toppy. All right, still a good level of resistance. Most recently, looking at this time here of 2/11 of 2020, it touched that level of resistance once again. Now, where did the bulls come in? Well, not only did we touch that level of resistance, we broke through on 2/12. That's a bullish signal. All right, breaking through a level of resistance that has been touched 1, 2, 3 times, finally breaking through, having followed through. That was a great time to get back into the market after the market pulled back, found a level of support, broke up, broke through, and had follow through. And currently, as of right now, we're still moving higher in the market. So now you get an understanding of where the Fed sits as far as interest rates. If we lower interest rates, that helps to stimulate the economy. If the economy is starting to really rock and roll, we will raise interest rates to start to slow down a rampant economy, to not let it get out of control. So that's where we stand as far as the market is concerned. The market is bullish right now, hitting a new high. The Fed is saying that interest rates are in place. Leave them alone. This is where we are, and now that is why we have more of a bullish feel in the market than not. Thank you for taking the time to watch this video. Now, if you're new to the software or would like refresher information about the software, click on this Getting Started video right here. Thanks to all of your input, here's a YouTube video that we think would be perfect for you. Click right here. If nothing else, folks, just hit the subscribe button right here.